Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, I'm going to give a warning about velocity banking. So one of the things I see a lot on YouTube, sometimes in real life, is about people emphasizing about velocity banking, being able to pay off the mortgage quickly. And the way that I would always phrase it is that you maximize your cash flow. You're right. Velocity banking is a strategy to maximize your cash flow that will help you pay off the mortgage quickly, but it's not always a given that it's going to help you pay off a mortgage in 5 to 10 years, right? And one of the reasons I say that is because you might have heard this in other videos where I talk about the mortgage is the loan that takes up the least amount of cash flow. And one of the biggest problems with real estate is that people will tend to overpay for it. And again, in another video, I showed an example. Oh, you have $100,000 discount on a $300,000 property, and you get a loan on that one, an investment loan. You still will probably negative cash flow, right? And what's crazy is that when I first wanted to get into real estate investing, I talked to somebody who had a little bit more experience, just a little bit more. And he said, hey, in the world of real estate investing, money's not the problem. It's finding the deal. And if you know how to find the deal, the money will just come out of nowhere. And I didn't know what he meant by that because in my mind, I was making only $20,000 a year. And I was like, no, I need money. And then once you become more acquainted with how real estate works, oh, it's like, oh, money's no problem. Like money's everywhere. In fact, in my own real life, I know a gentleman who has like millions of dollars in the bank, and he actually told me, I'll fund you any real estate deal you want, as long as it's good, right? That's what he literally told me, and I was like, dang, like I don't have any deals to show you because that's a lot of work, and I'm a pretty lazy guy. But the point is that the deal is way more important than the money, and a deal in real estate is just usually just discounted compared to what they would call market rate. And so one of the reasons I'm talking about this is because in our culture, housing is very, very overvalued, right? You know, think about like California, just a regular 3 bed, 2 bath home. People will pay $1 million to $2 million for that 3 bed, 2 bath, single family home in Los Angeles. And I read statistics that in Los Angeles, the mortgage takes up 75% of a person's income. And I didn't even know that was possible because of DTI ratios, right? I thought like lenders actually enforce that or something. But I've read statistics that a mortgage payment will take a 75% of a person of the median income there, right? And so why am I talking about this? Well, there's a reason why I always talk about buying a property at a discount and doing velocity banking together, because if you essentially overpay for property, velocity banking is not a get out of jail for free card. And one of the things that's been happening lately to me is that I've been getting random unsolicited emails, and it doesn't matter what income level you are. 95% of the time, I feel like I can help people, right? Like 95% of the time. But the one time and this has almost been like a certainty, the only times I felt like I've never been able to help people is when they overpaid for real estate. Okay? Velocity banking, yes, it will help you pay off your mortgage faster, but there has to be some cash flow, and the cash flow usually comes from paying off your other debts first, right? Like your credit cards or your auto student loan, and then you attack the mortgage. But if you make terrible real estate deals, there is no get out of jail free card, right? Bad real estate purchases will probably be the number one reason why you will fail, or why you won't even be able to do velocity banking. Okay, so think about this. Have you ever heard of the 28% rule? So let me just go ahead and Google this right here. 20% rule in housing, which says that the rule states that a person should spend no more than 28% of the gross monthly income on housing and no more than 36% on all debts combined, including housing costs. So basically, if housing is like 50 or 75% of your income, velocity banking is not a get out of jail free card. And that pretty much includes any property in a high cost state, like New York or New York City area, Los Angeles, California, Honolulu, Hawaii, just buying any old property, and even if you buy a discounted property, right? A discounted property in those areas, Velocity Banking is not a get out of jail free card. Okay. And actually, let's take a look at this. So I grabbed a screenshot from a news report from Hawaii News Now and says how much of your paycheck goes to the mortgage in Honolulu. A lot. And they said the average home price, the median home price in urban Honolulu is $1 million, and the national median family income is 120 grand, right? So housing is 10 times the median income, which is six figures. And you know what's even crazier? So let's say like, oh, I have money and I'm just going to buy any old rental property. Okay. So let's say, I went to Zillow and I found a recent sold property in Hawaii, Honolulu, Hawaii. I don't know if this is like some sort of, it says number two. So it's like a townhome or something. I don't know. But basically, this place in Hawaii was sold for $1.1 million in, wow, is it already June? Oh my goodness. June, right? And then if we scroll down here, or actually, let me take a look at this. So the mortgage payment is about 6 grand a month. Okay, the mortgage payment is about 6 grand a month. And let's say, oh my goodness, I'm so excited because Velocity Banking tells me I could pay off my mortgage in 5 to 10 years or whatever, right? And you actually think that this, you're in Hawaii and because it's desirable real estate, it might be a good rental property. Okay. So one of the things what we have to do is understand our marketplace and what is the price for buying versus the price of renting. So here, if we buy and we get a mortgage on it, we'll pay about 6 grand a month. Okay. For this $1 million home. Now, if we scroll down, there should be somewhere what's about renting. Where does it say? There's going to be a place where it says how much it'll cost to rent. And then it says right here, it'll cost $3,500 to rent this home, but to buy it, it'll cost you 6 grand, 6 grand a month, right? Ain't no way that Velocity Banking is going to save you here. Moral of the story, you have to make smart purchases. And again, this is one of the reasons why I don't like using the term pay off your mortgage in 5 to 10 years. I probably need a little asterisk about maximize your cash flow so that you can pay off your mortgage quickly if you do have it. I mean that's a little bit long, but you get the idea, right? But again, people have been emailing me about, oh, here's my spreadsheet that you inspired me to do, which I'm flattered, right? I'm really flattered. But then sometimes people make bad decisions when it comes to real estate. I mean, I could think of two people right now where one person had her husband switch jobs and now the mortgage is eating up 50% of the income because the new job took in less money, right? Remember, 28% rule. Like housing should never take more than 28% of our income. Second person has huge costs with real estate because doing real estate project and now is negative cash flowing with regards to personal income, right? And this is why I say, it's just my opinion, but this is why I say that if you're going to get into rental real estate and your tenant doesn't pay, you always have to be in a position where you're just going to be okay if the tenant doesn't pay. And you're going to be in a position of strength. You're going to kick them out if they don't pay. You're not going to do business in a anti-landlord state like California, probably New York, Illinois if you're in Chicago, right? But again, the deal is more important than money. And what we want to do is make sure that we just don't buy any old property and lose $3,000 a month in rent because the rental rate is much lower than the rate to buy, right? And you see this in a lot of places. In fact, I think almost the whole country is like this nowadays, just not to this extreme of Honolulu, Hawaii of $1.1 million, right? But remember the 28% rule in housing. And again, this is why it's so important to buy real estate at a discount because you could even still buy this Hawaiian property at a discount and still negative cash flow, right? So again, if you want a cash flow in many markets, you'll probably have to buy it at an extreme discount, and we're probably talking about $100-$200 a month cash flow, unless you're doing other plays than a regular long-term rental, but kind of like maybe short-term rentals if you're in a good market. All right, well, that's it for today. So just remember, World's a crazy place, right? Make $120,000 and the median home price is $1 million. It's kind of sad that the world has become like that, but it is what it is. Again, so the thing is, just to emphasize, is that when it comes to real estate, you really need to train yourself on finding the deal. And velocity banking is not a panacea of just a get out of jail free card because you overpaid for housing and it's taking more than 50% of your daily income. Okay. All right. Well, that's it for today. No spreadsheet just because I don't know. We'll just mix it up. I'll probably do a spreadsheet tomorrow. All right. Have a great day, everybody, and we'll speak next time.